Well, Donnie T is expected to show up in court again. Here is live footage of where we expect Donald Trump to show up in court again. And we've got to cover this rundown of excess savings being revised away. Very interesting, as well as State Street making bets that the Fed will dramatically start cutting rates next year. All of this within the time frame here as we wait for the JOLTS jobs data coming out at 7 a.m., as well as we'll get the opening bell in about 10 minutes. So State Street now betting against the whole higher for longer idea, suggesting that the Federal Reserve will cut rates potentially by a full percentage point next year. This is despite the fact that markets have actually revised down their expectations for Fed rate cuts by a whole 0.5%. Markets only expecting rates to come down about 0.5% next year. If we look at the curve of what interest rate trajectories might look like, it's a little aggressive in the sense that probably going to stay high for quite a while. At least that's what the market's thinking right now. Probably one of the reasons the market is thinking that is because of this crazy spike we're seeing in the yields, which we talked about in our early video this morning in the bottom line report. Highly encourage you go watch the bottom line report. But take a look at this. Implied overnight rates and the number of rate cuts. You can see here a peak coming in at still about 5.45 is about where we're thinking the rate peak is right now. I'll get the Fed terminal rate. I'll get the exact right now. But you don't actually see that coming down by December of 2024 any lower than really 4.6. And this being our January number right here. Sorry, this is December right now. Putting it about 4.7 puts you closer to about that half, maybe a 0.6 cut. State Street saying, nah, we're going to go 100 basis points. And you know what? It might even go down as much as 200 basis points next year. Now, State Street, just so you know, they manage like $3.6 trillion in assets. So it's a big deal that they're suggesting this. The idea is that mostly, hey, if inflation proves to be gone, then the Federal Reserve doesn't have to stay this high, and really that the lagged effects of Treasury yields potentially staying higher will do enough dampening to the economy for the Fed to where the Fed can really start reducing. Fed term is sitting at 5.45 still. That's the terminal rate for the Fed funds rate. Still waiting for Donnie T to show up here. We'll see what he says. Yesterday, when I briefly covered his speech yesterday, it was very interesting to hear arguments on both sides. I always like to pay attention to arguments on both sides. You know, on the Republican side for Donald Trump, you obviously have people, saying the same thing we've heard for a very long time as Republican, or that this is a witch hunt by the Department of Justice, and that really, the value of a brand is in the eyes of a beholder. Whereas then you have Democrats responding and saying, hey, well, I don't know how an extra 20,000 square feet for his Trump Tower penthouse can be in the eyes of any beholder when you're magically making up numbers. So it'll be a really interesting trial to see some of these actual details come out and see if the issues really just relate to appraisals or brand or what. There's a lot about, yesterday we did see Trump have some positive things to say about the judge, given that a lot of the claims being risen against him may actually be beyond the statute of limitations. So we'll see how that evolves. One thing I do want to touch on is this here, another piece on this potential rundown of excess savings being revised away. This is very interesting because TS Lombard, they're like our resident bears. Anytime you need sort of bearish information, look at what the bears are saying. And so when they say something bullish, I actually kind of I pay a little more attention to it because, I personally, I try to do whatever I can to look at things on both sides. But when a bear is saying something bullish, it's interesting. It's kind of like when a bull is saying something bearish. It's also very interesting. Anyway, what they're saying here is, it looks like, as much as we keep hearing that excess savings are gone, and now all of a sudden post-COVID savings have been revised up, and it might actually take the better part of a decade, they're saying, for excess liquidity to get worked down, not months. And it will impact Fed policy. Now, that's the bearish part again coming in, suggesting that, well, if you end up having more excess savings, maybe does that mean the Fed has to be more aggressive against rates? Remember, one of the things that everybody tends to forget is that you do not need a bad economy to get rid of inflation. You just need inflation to go away by the regular dynamics of an economy. You don't actually need to destroy an economy to get rid of inflation. A strong economy, put another way, a strong economy does not mean that inflation will come back. So anyway, T.S. Lombard says here, this is not to say the economy is impervious to a downturn. Basically, hey, look, if we have more of this excess savings, does that potentially mean we, avoid a downturn? And of course, taking the bear argument here, T.S. Lombard says, oh, no, don't worry. There can still be a recession because real spending has slowed down markedly in August. Chart 2. We'll look at that in a moment. But there is enough volatility to keep from calling a one-month trend. Big jumps in July spending will convert into an acceleration for Q3 GDP. Atlanta Fed now GDP is estimating Q3 sitting somewhere around 4% growth. But it potentially sets up for a sharp comparison to Q4. And if the spending we saw in August continues, well, then we could end up, unfortunately, seeing some worse numbers coming out. Then we've got over here real discretionary spending. You can kind of see that sort of wall hit over here in August, which is interesting because you also kind of started seeing real estate hit a wall in August, much more of a real estate wall being hit in September. We talked about that in this morning video as well. I gave some examples of some properties, so make sure you watch that bottom line report this morning. And of course, go to househack.com to learn about my real estate startup. Househack.com is accepting non-accredited investors now, which is very exciting. So, okay, let's see what else we have here. We have, let's see here. Okay, we do know the pace of employment growth has slowed. Okay, this is actually going to be pretty important because this morning we're getting the JOLTS data, Job Openings and Labor Turnover Survey. It stands for JOLTS. That data comes out in about 34 minutes. We are looking at a prior release of about 8.8 million job openings, and we think that the current survey will reveal an 8.8 million job openings number. So we'll see if that, ideally, this is what you want if you're trying to trade it. Ideally, that number comes in even lower. We kind of want less job openings because we want that to be more in balance with how many unemployed there are. So we want to get that number down to about 6 million job openings. The faster we get to that, the faster the Fed can be convinced that they've actually finally done enough. We'll see. We do know that the pace of employment growth has slowed, correct? Wages are nominally slowing as well, but the cost of carry for existing consumer debt, not counting mortgages, has skyrocketed. Yeah, well, exactly, because mortgages have this long lock-in, which is something else we talked about for corporations this morning in the bottom line report. These percentages in and of themselves have in the past signaled an economic downturn, maybe not tomorrow, but accumulating evidence continues to build in that direction. It seems like T.S. Lombard here being a little bit more bearish on the debt crisis and that consumer spending is plummeting in August. But again, we don't know if that 1 month hit will end up making a trend. We'll see. High level of liquidity on household balance sheets is obviously getting people through this. But we'll see how long is that actually going to last. So we are awaiting a few things here. We've got 2 minutes to the opening bell. We've got Donnie T expected to walk into court over here. We'll see if he makes any kind of statements again. And we'll get the opening bell in just a moment. Let's listen to what Jimbo has to say here for a brief moment.
I think these guys, this is a very, very good company. They've got gross.
Why is the stock down 5%?
Because they did not report a good quarter. They have better guidance.
Okay.
And I want you to watch this because this group is under so much pressure, whether it be Pepsi, whether it be Kellogg, the kind of cereal kind that's ringing the bell, or whether it be pretty much General Mills. I mean, look at Smucker, Colgate, Procter down for just a huge number of days. This group is trading as if the margins are going to be crushed, the dollar is going to crush it, and the numbers have to be cut aggressively because outfits like Costco are pressuring these guys to lower the prices. But the fact that this stock is now back to where it was before COVID tells you that there might be some value here.
Okay.
It does have a high multiple.
So you believe them.
In the meantime, it looks like House Speaker McCarthy is expected to hold a vote to vacate the motion or hold a vote on the motion to vacate. So in other words, this is an attempt to basically kick out Kevin McCarthy as Speaker by Matt Gaetz of Florida, and we'll see where that goes. That vote is expected to be held today. Today being Tuesday. Today's also the start of the Sam Bankman-Fried trial. They started jury selection about 29 minutes ago. 1 minute to the bell.
No, Brandon.
Oh, seconds to the bell.
So it's a great company caught up in the vortex of this very moment involving the 10-year tyranny.
Here at the big board, as previously noted, W.K. Kellogg is celebrating the separation of its cereal business. We will speak to CEO Gary Pilnick. That'll be a few hours from now. Over to NASDAQ, Cooper Companies, medical device company doing the honors.
Good company. But you have to ask them, like everybody else, what's the impact of a sugared cereal with drugs that make it so you don't crave it? And I think the problem.
All right, well, there's your open. Nice red all the way across the board. Why is one of the reasons we're red across the board? Well, because once again, the 10-year Treasury up at 4.72%. Crazy, up 3.7 basis points. Let's take a peek at the 2-year quickly just to see what we're getting with the yield curve. The 2-year is slightly negative. That's how you get a steepening of the yield curve, when you have the 10-year escaping the 2-year. Now, ordinarily, you would like to see the 2-year just plummet and the 10-year also slowly plummet. That would be a nice way to steepen. To get this kind of steepening, it's a little rougher. Let's take a peek at how the stocks are moving, and then we'll also continue to await the Danny T arrival here. So let's get into some of these here. What do we got? We got Warby Parker up 10%. Nice. Let's see how they're doing. Let's see if there's any particular news on them or if they're sort of just memeing. I actually like their glasses, and they get a bunch of stores now too. They used to just be online only. Warby Parker rallies 4%. Well, a little more than that now, 9% after 2024. After Evercore says 2024 will be an inflection year for the company. Ooh, inflection. Excuse me. All right, so then we got what do we got? Dell up 1.4%. Not a lot green. You got Fiverr over here, 4.6%. What do you got on the downside? Tattooed Chef and Smile Direct basically down 40 and 25%. Sunrun's down 5%. There goes solar again. SunPower, Sunrun. It's really just, I think the higher the 10-year goes, the worse these solar companies unfortunately do. So plenty of opportunity to create a position on those if you were so inclined to. Anyway, Airbnb 132, Open Doors back down to what, $2 here, or what do we Open Door down back down to $2.56. Had a crazy meme euphoric run there for a moment, back to $5. Tesla down about 247. Kind of where it was about 33 months ago, which is kind of wild to think about that, almost 3 years ago. Lemonade's down a couple percent as well. And a lot of red, another 1.7-ish% for Enphase to the downside. We've got Bitcoin sitting at, well, let's see, Ethereum sitting at 1,600. And we have BTC coming in at 27.5. QQQ today so far looking to be down about 50 basis points. And the morning trajectory is actually positive. So we'll see how that evolves. Let's just back in over here.
Yeah, Novo Nordisk is like this, and Hershey's like this. It's a death cross.
Right. Coincidence?
No, it's all real. And, frankly, people are just presuming that people who own these were dealing with margin contraction. We're dealing with the tyranny of the 10-year. And now we have this scourge that makes it so that you don't want food that you historically crave.
Audrey Burns here says, I'm seeing pretty substantial layoffs in the health insurance career areas. There's also a hiring freeze across the board. Tell us more. So health insurance, is this like the Kaiser world? And is it like back office? Is it AI? Is it nurses? What do we got, Audrey? Interesting to hear in terms of substantial layoffs. I think there's also talk about potentially a healthcare related strike in California. So we'll see what happens here. Let's keep listening.
I don't know, pork rinds. I don't know.
Last 30,
watch
40
oil.
years.
Watch oil.
Watch oil. You're moving on to oil now?
Well, I'm trying to.
Waiting for Donald to show up here as well.
Oil was down nicely this morning, and I said maybe we'll have 2 days in a row. But now oil seems to have stabilized. I'm looking for things that are going the way of the bulls, and right now it's harder to find. It's sentiment, because sentiment is incredibly negative.
Yeah, I mean, listen, the key to this market is still the 10-year. Let's take a look at where the yield is. Of course, as we pointed out, it has not been this high since 2007.
Right.
It's really is the early days of the financial crisis really being. Look,
will you look at that? Wow, that is better than Nvidia. That darn thing.
There's an influencer saying that gold is going to $25,000 before the election. What do you say about that? I think they have calls on gold, and that's pretty manipulative. Are they also selling gold? I mean, I hate to sound extremely jaded there, but 25,000 for gold. I mean, hey, maybe in like a 1% reality it could happen, but I would say there's probably a 99% chance that does not happen, given that, that would be a, 12x or something like that. And I mean, how has gold actually been performing? Last I checked, let's see, let's go to like, I don't know, go look at IAU, which is an easy way to invest in gold. You're down recently despite the economic turmoil. This has kind of been your fib retracement here on gold. I mean, I'm not seeing the real potential here for a dramatic breakout, and certainly not a 10x from where we sit now, or 12x. I don't know. That seems a little ludicrous.
And then the third is that, like, American Electric Power, great company, yields 4.6. What good is that, David?
That's no
one
good.
That's utility that you've not talked about,
years,
but is you're right in your wheelhouse, so to speak.
Me, yes.
What do we do with Verizon yielding 8.4%?
Looks like we're getting a little closer here on Trump showing up as well.
Yeah. Wow. Yeah. Now, if you work at Verizon,
I hadn't caught that.
If you work at Verizon, Hans Vestberg, do you say to yourself, I'd rather be T-Mobile because they don't have to sit there with the tyranny of yield because they hardly pay one, and T-Mobile hangs in so well. Mike Sievert being
dividend yield is 7.6%.
Well, they cut that once,
They did.
That thing's like a salami slicer.
Still not over it, but
that could happen again. No, I'm not. But it could happen again.
By the way, give me a Verizon. Let's just really rub it. Give me a Verizon 20-year.
I want you to watch.
And I'd like to look at a Verizon.
I want you to watch Procter.
By the way, keep in mind when we do put up these 20-year charts, we aren't doing total return, so we need to be fair.
Right, TSR.
Because they are obviously giving you a significant dividend now and have been for many years. Not 8.4%, but nonetheless a significant one. Nonetheless, look at that, Jim. Nothing.
No. Plenty of nothing. Wild bunch.
This was the leader by far.
Well, this used to be a widows and orphans, and now it's I don't know.
Now it's it's a $130 billion company. I mean, our parent company is 180.
Yeah.
T-Mo's $30 billion bigger.
Well, they have to spend a lot, and they're not getting a great return for that.
I'm not sure what the strategy should be there.
Procter's trying to make a stand.
Procter's trying to make a stand.
Yeah, Procter.
What is that? What's the significance of Procter trying to make a stand?
Well, because these stocks have been down.
All right, let's pull off that for a moment and just chat a little on some of the catch up from yesterday's Trump trial. Of course, Trump mentioned, I've been sitting in a courthouse all day long instead of being in Iowa, New Hampshire, and South Carolina, or a lot of other places I could be. This is a horrible situation for our country. It's election interference. Talks about how the banks loved him and loved his businesses. I think the one thing everyone can agree on, who's on the left or on the right, is that it's extremely obvious this is a way for Donald Trump to campaign. He's not in Iowa or otherwise because, quite frankly, being here, even though he doesn't have to be right now, is probably really profitable. I mean, you're running a campaign every single time Donald Trump is in the news for these indictments or court cases or otherwise. His donations go through the roof, so it's a good strategy. I always say, like, let the money guide you in terms of whether or not what you're doing is working. And if you're making more money doing something, then do more of that. So then you can invest more or campaign more or whatever the goals might be. Reuters doesn't seem to be able to hold a camera steady here. So you're getting ready, but anywho. So we'll see what happens. A lot of this does relate all the way back to Trump Organization accounting from 2011 to 2021, suggesting that there may be some statute of limitations issues or otherwise coming up. We'll see what ends up happening. During the lunch break, by the way, yesterday, Donald Trump did chat suggesting that the judge is a rogue judge and potentially a Trump hater and corrupt person. I mean, none of this is really a surprise, as that's somewhat also how Trump started the day. And there was also an argument at one point between the judges and Donald Trump. The judge and Donald Trump's attorneys. Let me say that correctly. About the submission of evidence and what evidence would be material or otherwise. So we'll see. Getting off to a little bit of an entertaining start, as you would somewhat expect it would. So okay, I'll keep an eye on this. See when we see any showing up here. Let's take a quick look over here and see how this is going.
Having watched the dogs, I can trade down the dogs. I can give them anything I want. There has not been a word of resistance. And that's why Petco, because they have that really bad balance
There's always
sheet.
been some hope this thing would get taken out somehow.
Oh,
it hasn't happened. By the way,
not
again,
under
20
Leader
years on this
Khan.
one's probably not looking too good either. Remember when what's his name, Ruben Mark ran it? Everybody loved it.
He didn't want to come on. He hated TV.
Yeah. That's all you think about is whether they came on or not.
Well, I try to book
Not
everybody.
whether they did a good job running their company.
I'm a booking magician, my friend.
All right, 23% over 20 years. Let's make people feel happy. How about we put up an AMD for 20 years?
Sure.
Right?
AMD
Or
is
an Adobe
Lisa Su.
or an NVIDIA.
NVIDIA has been a remarkable.
That'll make people happy.
These are companies.
There we go. Now I'm feeling a little better.
You know, someone's going to say it's trading down here, the right shoulder. I think Lisa Su's doing a remarkable job. NVIDIA
Still got a little bit of that rotation up on the QQQ. Looks like down on Tesla, for example, dropping to about 1.8 to the downside.
tenure. That's what
we're
in this for. That we're trying to. David, today could be a fulcrum day.
Really?
Yeah, because everybody comes in and they say, all right, I guess I got to sell because of the 20-year and the 10-year. And you don't have to sell. Not every company's
What I'm
worthless.
wondering is whether I should just buy some 10-year paper.
Is Colgate
and just put it away?
Split it with 10-year and companies like Kimberly.
Especially if I think inflation's
Kimberly is
coming down.
4%. Do you think Kimberly Clark, we are not going to come in one day and say, you know what? I want some Chinese tissue. I want some People's Republic of China toilet paper. Ain't going to happen. Okay? Their biggest problem, of course, is the kids, Kirkland Sager. But Kimberly Clark is Kimberly Clark's a good brand. I mean, I think it's a loved brand in the country. No, it's like, hey, what's the General Cho got there? I mean, no, I'm not. Look, I don't mean to make fun. My father worked for the Chinese. They're fantastic.
Right.
I'm just saying they're not going to replace it. This is not going to be replaced by we're not going to replace it by Neo.
Is anybody talking about?
No, I'm just replacing. I'm saying Kimberly Clark is a brand that can hold up here.
Okay.
It's not going to go away.
Interesting, by the way. First of all, just to respond to Kramer here, I'm not a big fan of suggesting that consumer staples right now can hold up in this escape from inflationary faux pricing power era that we're in. Still waiting for Trump to show up here. But I do think this is very interesting. Here's a note that when you look at what the S&P 500 price to earnings ratio was when yields were this high the last time, which was last in like 2006 and 7, you ended up having a price to earnings ratio for the S&P 500 of right around 16.9 to 17.5% in that range. Right now, the S&P 500's PE ratio sits about 20. So that's a good chunk more expensive. I mean, you're definitely 10 to 20% more expensive on the S&P 500 from a PE point of view. I'm not the biggest fan of the SPY myself. I prefer some of the NASDAQ style allocations or pricing power allocations that I think will do very well over the next 5 to 10 years. But that's specifically because there's so many staple companies in the S&P 500. I think will continue to underperform, but we'll see what happens. So at the same time, we got to look at oil quickly while we wait. JOLTS data coming out in 16 minutes. Oil right now sitting at 90.73. Didn't make it to 100 on oil. Lot of hopium that oil was going to make it there by a lot of investors. And one of the things you find is you get these rapid moves to the downside in oil. We just recently saw that. I'll pull it up on screen here. Let's give me 1 second here. I think this is very interesting. So you go to oil, you go to Brent, and the Brent figures. Let's go to the last 3 months. Show it to you here. Look at that. Brent just sort of dropping off here just over the last couple trading days here. You get this sort of these drops pretty rapidly, I think, as you get people finally taking their profits on their longs for oil, suggesting, all right, we've talked enough about oil going to 200 or breaking over 100. It's sort of like feeding the media the narrative of what you want to happen. And then what ends up happening, they take their profits, never ends up getting that bad. And it all goes back to everybody wondering, oh, man, how manipulated is the market? Jeez. Anyway, so let's see what else we have. We have lots to do. We've got the JOLTS data coming out. Tomorrow we've got more data coming out as well. Let's pull up the calendar of what's ahead. JOLTS data, again, coming out at 7 a.m., 10 a.m. Eastern, 7 a.m. California time. We've got tomorrow, we got the ADP report. And then on the 6th, which is in 3 days, we've got the non-farm payrolls report. Looking for 170,000 jobs on the non-farm payrolls report. ADP report looking for about 150,000. Still right about the average that we saw pre-COVID, which was right about 170,000 jobs. So not like a massive softening here, which could sustain this spending that we're seeing, especially with the higher levels potentially of excess savings that T.S. Lombard was talking about, which we covered earlier. Keep in mind, people had zero excess savings before the pandemic. Before the pandemic, it's like, okay, people just spent money after they made it. So the whole idea of excess savings, I think, is very interesting, but and not so scary of excess savings potentially going to zero. But otherwise, hey, if you haven't yet, while we wait for the JOLTS numbers here, Trump to show up, make sure you check out the Noob vs. Pro courses. Go to meetkevin.com. There are a bunch of Noob vs. Pro courses. We just added some more. These crash courses will be filmed brand new within the next few weeks, and we'll start releasing those. When they're released, we expect the prices for them to be about double what they are now, and we're pretty excited to get some brand new content out for all of these various different courses. So check those out at meetkevin.com. Noob vs. Pro courses are also pretty inexpensive barrier to entry right now, as they are on pre-sale and there's no content just yet. They're just $89 per crash course. So check those out. All right, what do you got, Jimbo? While we wait,
when we got the PC, everybody felt that we got the PC. I was in law school and I was supposed to be out of a job. PC didn't do jack against me.
Jim, we got some news to get to out of
What's
D.C.
that?
Yeah, I want to get to Emily Wilkins for that update on what's going on with Speaker McCarthy. Emily.
Hey, David. Well, as you know, last night, Congressman Matt Gaetz took the first steps to potentially oust Kevin McCarthy from his speakership. Now, of course, that actually does need to get a vote, and we are told that that vote will occur around 2 p.m. this afternoon. That was just decided in a closed-door session where Republicans are meeting today. Behind me, it's the Democrats who are meeting, and they are going to be incredibly key for this vote as to whether or not they decide to back McCarthy. McCarthy does not have enough votes within his own conference to survive this kind of challenge, and so he's going to need help from Democrats. But McCarthy actually told CNBC this morning that he's not going to be offering anything. He's not going to be making any deals. And Democrats in there are trying to figure out what the path forward is going to be. It's a moment where they have an enormous amount of leverage. But the question is that if McCarthy is ousted, what is that actually going to look like for Congress? David?
Yeah, thank you, Emily. Interesting listening to Speaker McCarthy this morning, talking to the Squawk Box about the various options available to him, and obviously his thoughts about Matt Gaetz. We'll be following it closely.
The guy's a survivor. Say what you want. He's
Yeah.
a survivor.
Yeah.
I want him on my. That guy stays on the island.
He does. He stays in the
Man.
island.
I got nothing for the other people.
All right, let's
Jeff
get to
Probst
us.
is one of the
We're going to
greatest.
take a quick break.
A lot of them.
Just catch your breath.
All right. So there's a little update on McCarthy, which we saw earlier that the vote was going to happen today. Now we know a time. Looks like it's going to be about 2. JOLTS data about 11 minutes away, and still on standby for potential. Eventually here Trump's going to show up, so I shouldn't say potential, but eventually. So we'll keep an eye on this. NASDAQ continuing to rotate up, now only down about 1/3%. Sharper little candlestick just now in the last minute to the upside on both Tesla and the NASDAQ, both moving up. Tesla now only down 1%. Enphase also trying to move up, also down about 1%. You've got Apple rotating up about, it's down 1/4%, but trying to rotate up. Intel, one of my favorite value plays, sitting up about 2.8%. It's a great company, great valuation. Obviously no guarantees, but see what happens. Looks like things are getting a little more exciting here about getting ready for Danny T to show up and maybe make some kind of statement. At the same time, once again, we are 10 minutes away from that JOLTS report, looking for 8.8 million, and we'll see what we end up getting here. Okay, so let's, in the meantime, see what else we have. So we have... well, we're getting closer. More individuals walking in here. Okie dokie. Yep. Well, everybody's sort of just bored. So while we wait for that, I'll take a peek over here and I'll keep an eye on that. So here's a little peek on a Bloomberg piece about the end of pandemic era federal benefits, basically poverty-related food programs, food aid programs, very popular programs as part of the CARES Act. Unfortunately, the end of these is sending child poverty rates skyrocketing and leaving some states to try to fill in the gap. 11 states have created or expanded a fully refundable child tax credit, $3,600 per child, and that is following some of the expirations of some of the other benefits that we've seen. In July, for example, nearly 1/5 of children were living in poverty, close to the pre-pandemic rate. So you kind of had this period of time where you took more people out of poverty during, well, the time of money printing, and I mean, to much of an extent, that makes a lot of sense. Facing the reality of so many families still struggling due to the economic and health impacts of the pandemic, states had to step forward in big ways. Child poverty surged the most on record in 2022. Of course, you're comparing to the pre-COVID era, and of course the hole that you kind of had of child poverty in 2021. States including New Mexico, Maryland, Minnesota have adopted some form of tax credits for family, but no states in the South, which are home to some of the highest U.S. poverty rates, offer any kind of child tax credits. Found this very interesting. Under New Mexico's expanded child tax credits, families with children under the age of 17 will be able to claim up to $600 per child. Maryland provides families with an income of $15,000 or less with a credit of $500 per child. Minnesota established a child tax credit this year that provides the largest amount compared to other states, up to $1,750 per child. You know, what's interesting is you have some folks like Patrick Bet-David, for example, who argue that we should be doing the opposite of this, providing less care or support for those in poverty or single mothers, suggesting that what you do is you incentivize having children without having stable family foundations or stable employment or stable jobs. Of course, supporters of these stimulus programs will argue that, well, if you've fallen on hard times, you need some kind of program to assist you while you get out of hard times. Problem that others then say is that, well, a lot of these temporary programs end up just becoming permanent and forever support, and then they remove the motivation to ever unlatch from these temporary support programs. reiterating the need for them to potentially exist forever. Here is a full chart, by the way, if you wanted to see it, of the 11 states offering tax credits. Highest offering is Minnesota, up to $1,750 per child. You can see a lot of these phase outs starting around $25,000. Maine actually has a phase out starting at $200,000, which is a pretty high phase out, but then it's also up to about $300 per child. Whereas California is offering about up to $1,000 and $1,083 per eligible tax return. Interesting way to put that. You got to be a taxpayer in order to get it in California. Phase out beginning at $25,000. Same in Colorado. Some of the other states listed here. You can pause on that. Take a screenshot if you'd like. Long-term consequences. Both Republicans and Democrats have floated proposals to expand the federal child tax credit. But we'll see if that ends up getting expanded or continued. Researchers at the Washington University in St. Louis found that in 2018, child poverty costs in the U.S. Were over $1 trillion, accounting for about 5.4% of GDP. It's because children tend to be less productive. That's like worker productive, right? And there are higher costs related to crime and healthcare for children. All right, let's see here. Still waiting for Donnie T and the JOLT numbers. So JOLTS numbers, we're about 5 minutes away from those. And when we look at what's going on with El Marquette, we are sitting at Tesla down about 82 basis points. And we have the NASDAQ almost green. Almost. Sitting down about 12 basis points and trending up. So let's see here. Benefits of support are heavier than the benefits of incentives. That's the problem, IMO. The balance is tilt towards the broken. Either reduce the benefits for the broken or increase incentives, says one here in the comments. Someone else says, I've gotten like $4 an hour more in the past year. Going to be making bank when this market explodes, then dump cash into assets. Nice. Yeah, go buy some real estate. And obviously that's dependent on everybody else's situation, but do check out real estate investing. Love Patrick Bet-David, but some of his views are too extreme for my liking, says someone else here. Straight chillaxin says that. Sean says raise wages and child poverty rates would go down. Wages are beyond stagnant right now. Well, wages, if you average it out over the past few years, might be stagnant. That is true, but real wages have gone positive in the latest reports. Which is a positive trend. And, hopefully that continues for folks. There is, though, the counter argument that wages should go up only as worker productivity goes up or worker value goes up. One of the risks to potentially forcing wages up without value going up is that companies end up not hiring as many people. And so you actually end up with more joblessness and less overall wages being paid, leading potentially to more poverty. An easy example of that might be like McDonald's and automating registers with computers where people can now place their orders through the large computer screens, removing the need to have maybe 3 or 4 cash registers operating down to maybe just 1 cash register operating and 4 large computer screens. Well, now all of a sudden what you've done is you've eliminated 3 jobs for people. So now 3 people that would have otherwise had a job don't have a job. And so, some argue, the leftover people should be paid more. And then others argue, fine, but then there might be an attempt to just continue to, continue to automate away, right? Hold on a sec. Automate away the need for those employees in the first place. So we're trying to get I guess that's true. Let me grab another shot here. There we go. Okay, cool. So who knows? I guess that'll just be debated for a while. I'm getting pinwheels on this for some reason. Hold on one sec. Must be getting close. Okay, yeah, there we go. We're good. Good. See what some of the other comments are. Let me see what's going on with this. There we go. It's fine. Okie dokie. Netflix raising prices after actor strike. Nice. Let's see here. Interesting. Seems like a lot of these camera feeds are falling off. I do have one here waiting for still Donald Trump to come in. We're about 15 seconds away from the JOLTS data, so let's get the JOLTS data out of the way. JOLTS data coming out in just a moment here. Again, we're looking for 8.8. 8.815 is the survey. That's down from 8.827 prior. Oh my gosh, the job openings coming at 9.6 million. Oh, and the stock market goes straight down on that read. Instant red candlestick straight down. NASDAQ down now about 0.5%. I mean, that's a whole 0.25% down in an instant on this really hot JOLTS number that's going to call for more of the higher for longer calls, maybe another interest rate increase. Oh boy, that's another rough survey there, hitting stocks immediately. Let's go listen to see what CNBC has to say about that.
Selling off again, down 0.5% on the S&P 500. NASDAQ down today, too, down 0.6. It's still positive on the week because it got a rally yesterday, but those gains are slipping. The only sector right now that's higher in the S&P, materials. Industrials and staples were up there, too, but they just turned negative, and everybody else is down. Consumer discretionary, utility, the rates.
I'm surprised they're not talking about the JOLTS number. Oh, by the way, the prior JOLTS read of 8.827 was revised up to 8.920.
To the trading session, here are three big movers we're watching. HP, Berkshire Hathaway revealing that they have pared the stake in the company down to 10%, but Bank of America says the stock has bottomed here, making a rare double upgrade of the name from sell to buy this morning. It's up 3%. Eli Lilly signing a deal to buy cancer therapy maker Biopharma for $12.50 per share in cash, roughly $1.4 billion. Shares of the latter name surging on that news, and competitor Novartis will be on next hour. McCormick, one of the biggest laggards right now in the S&P post results, matching analyst estimates despite a 2% volume mix decline. Really, the thing that's upsetting investors there is the guidance raise was on the back of weaker or better performance.
Okay, I'm going to read off some of the JOLTS report here. So the number of job openings increased to 9.6 million on the last business day of August. Over the month, the number of hires and total separations changed a little, 5.9 million and 5.7 million, respectively. Within separations, quits, 3.6 million, and layoffs and discharges, 1.7 million. Little change here. It's really just a headline number that moved substantially. Let's see if they get a summary now. Here it is.
Strong number for job openings and labor turnover, affectionately known as JOLTS. Number 9,610,000. That best estimates, and it is the best level going back to May when it was slightly higher at 9,616,000. A revision also putting a little extra horsepower. Last month's 8,827,000 now stands at 8,920,000. And of course, rates moving up towards the high zone. Remember, the roller coaster ride can be wild, but I always like when it stops. It's the close that matters most to technicians. And if any close above 470, many that have been trying to pick a temporary top will, of course, concede, and you might see some late session selling, pushing yields even more aggressively to the upside. David, Sarah, back to you.
All right, yeah, reaction is swift and big in the bond market. Look at the intraday of the 10-year yield on the back of that hotter report on job openings, moving back above the 9 million mark. Remember, fewer than 9 million last month for the first time since 2021. The Fed, the market.
Here's Donnie. Oh, let's make sure we get audio here. Uh-oh. Oh, there's no audio. I'll figure this out. Stand by. Got it. Do I? Shoot! Why?
Is and will, and I hope you're impressed. We built a great company.
I don't know if you can hear that.
He's been given false information, misleading information, and corrupt information by a very corrupt and incompetent Attorney General, Letitia James. This woman is grossly incompetent. She ran on the basis, I will get Trump without knowing anything about him. So he's been given this information. It's now been proven to be false, such as Mar-a-Lago and Palm Beach, Florida being worth $18 million when in fact it's much closer to $1.5 billion. And I appreciate very much the officials at Palm Beach calling yesterday and writing and saying that she was very wrong. That's not the way you value the property. So she said it was $18 million. It's $1.5 billion. Likewise, we've just recently sold 2 properties for many times what they were worth, many times what they were worth in the financial statements. And the statements are actually much lower than the actual net worth. She knows that, but she's fraudulent. Because of the fraudulent numbers she's given, many of which, Mar-a-Lago is just one example.
Let me try really quick. Can't get it. Okay, we'll keep going.
This case should be dismissed. This is not a case. And she should probably be dismissed also because she's terrible and grossly incompetent, as I've said. But at a minimum, she should start looking for the murderers and the criminals, the violent criminals all over New York, do something about all of the illegal migrants pouring into our city and state, and not spend the next 6 months in a courthouse because she's been caught early. Her numbers are fraudulent. She's a fraud. Her numbers are fraudulent, and this case should be dismissed. And they ought to get on to violent crime and solving the problems of New York City and New York State. Thank you very much.
Mr. President, why did you decide to come? You didn't have to be here today.
How big is your apartment in Trump Tower? Are you telling the truth?
All right, there you have not only the JOLTS labor turnover survey, but also the discussion from Trump. I don't know, there was a little bit of an audio glitch there. Sorry about that. But I think we got most of that there. Yeah, we'll see what drama unfolds today in court. At the same time, we have drama in the stock market, which we'll see how that unfolds as well. Find it very interesting. So anyway, if you like this, make sure to subscribe to the channel. Watch the bottom line report after this. I posted the bottom line report before this. So many of you, by the way, thank you for your comments, but so many of you have been saying, Kevin, can you do the bottom line report and go live for the opening bell? So we're trying it today. Like the vids, support the videos, go watch both of them. Hope you enjoy them. They've got both got different content. I'm going to jump now to the course member live stream. Remember to join me in the course member live streams. Go to meetkevin.com, learn about those Noob vs. Pro courses. Just $89 to join the Noob vs. Pro courses. Brand new content that'll be released soon. It's on pre-sale right now, and the price is probably going to be about double what it is now once the content actually comes out. So consider joining there. Join the course member live streams and check out househack.com if you haven't yet. Thanks so much. We'll see you in the next one. Goodbye.